Hello and thanks for stopping by for another livestock market update. I'm Colter Brown from the Northern Ag Network. May was certainly a busy month for our markets with a lot of price volatility. We did see a shower or two, but drought is definitely still with us. In today's report, we're going to talk a little about the grain markets and the cattle futures and how they're impacting one another. Definitely going to talk about the busy pear and dry cow market that's been affected by the drought. We'll look at the sheep market as well and wrap up by talking about the push for more market transparency and lawmakers requesting an investigation into the packing segment. I do want to thank our sponsors, Ag Risk Advisors, for helping us put this report on. If you've got any questions about livestock risk protection or pasture, rangeland, and forage insurance, definitely reach out to them. I know with the video sales coming up here over the next month, we're going to be watching closely to see what these calf prices do. But if you're interested in any price protection options, LRP is definitely a good one to look at. And for PRF, that's definitely going to pay off well for ranchers this year as they look at dry conditions and may help them afford some extra hay costs this year. If you're interested in PRF or you're not ready to pull the trigger, Ag Risk Advisors can help you set up a coverage example and track it with you so you can see how a policy performs before you commit. Well, cattle futures did show some recovery over the month of May, but corn really limited the rally in the feeders as corn reached record highs early in the month, but did come down, and that allowed the feeders to make a little ground. But we've got elevated costs of gain right now due to those feed costs, and that's likely to continue to be a major influence on feeder prices through the summer. Thankfully, though, the feeders did gain about $10 back in May, quite a bit of what was lost in April there. And if you look at the deferred futures, there does look to be some opportunity if we can get to that point without losing too much money. The movement in live cattle futures was much more muted, but they did make some of the money back this month. We've gotten very little help from the box beef for the fed cattle, though. Box beef prices are at one-year highs. I didn't know if we'd see it above $3 again for a long time, but there we are at $3.30 right now. We love to see the excellent beef demand, but wish more of that dollar was getting back to producers. Speaking of beef demand, U.S. beef exports had a record month in March and actually finished the first quarter ahead of the previous year by about 3%. Beef exports are definitely a strong point right now, and they look like we're going to have a strong rest of the year as other countries open back up. Cash cattle trade pretty quiet through the month of May, holding very steady as abundant harvest-ready fed cattle supplies continue to give packers all the leverage. The silver lining to packers making about $1,000 per head is the incentive there for them to process heavily and work through these supplies. In the monthly cattle on feed report, we did see on-feed inventory moving lower and marketings moving up. The good thing from that, though, is we're starting to work through these supplies, but it is difficult to compare to a year ago given the supply chain disruptions from the pandemic. Drought is certainly a major factor in this cattle market. Producers are culling a little more heavily, and that's going to increase beef production if it continues much longer, which will just stretch out the time it takes for this market to rally. However, the industry is in its third year of contraction, and if drought exacerbates the shrink in the cow herd, that could quickly change the situation. We could enter a situation where we go from too little packing capacity to excess, and that would shift the leverage from packers over to feeders and cow-calf producers. Packing capacity is surely increasing. Over the next 12 to 24 months, we'll see a 4, maybe even 5% increase to capacity, and that will help to change the leverage and create more competition for fed cattle. Like I mentioned, though, drought and high feed costs definitely big drivers in this market right now. Unfortunately, the rainstorms have been few and far between, and we've seen ranchers reduce their stocking rates to match forage resources. There, of course, because of that, have been several cow-calf pair specials this spring, about at least 2, maybe even 3 a week. At Stockman's Livestock in Dickinson, we saw young cow-calf pairs average $1,510 with a top at $1,900. Solid mouth pairs averaging $1,360 and short-term pairs ranging $1,050 to $1,375. In Torrington, some optimism from moisture helped the market out. A light test of young pairs topped the sale at $2,000. Bunch of middle-aged pairs ranging $1,400 to $1,700 and older pairs $1,100 to $1,400. A lot of dry cows are coming to market as well, but prices holding up pretty well, mostly due to strong demand for ground beef. Across the region, the majority of the cows with a little flesh selling from 60 to 68. At Roswell Livestock, we saw the bulk of the cows ranging 58 to 68, but as you get into the thinner cows, they're definitely starting to dip down into the 50s. And for the sheep market at the public auction yards in Billings, we saw feeder lambs performing pretty well with 60 to 80 pounders selling $275 to $295, 80 to 100 pound lambs $232 to $280, and ewes lower on a very large offering selling from $75 to $95. And the big news this month was the closed-door meeting of cattle producer groups in Phoenix at the bequest of the Livestock Marketing Association. That included the NCBA, RCAP, U.S. Cattlemen's Association, American Farm Bureau, and the National Farmers Union, where they talked about ways to address the imbalance between cattle and beef prices. That discussion, of course, focused on price transparency and packing capacity, oversight of the packing industry, and concentration that we're seeing there. They came away with 3 action items to take back to their organizations. They're going to urge for the renewal of livestock mandatory price reporting that comes up at the end of September to include formula-based prices and a contract library. They're also going to urge the Justice Department to move forward with their investigation of packers, and they're going to encourage the development of new independent packing facilities. Some of these groups are frequently at odds with one another, so it's a big deal that they can come together and agree. Agriculture has a relatively small voice on Capitol Hill, so cattlemen have to get on the same page if we're going to push for any changes in this industry. Shortly after that meeting, we saw lawmakers send a letter to the Department of Justice asking for an update and urging them to continue the investigation into the packing segment. And we're also seeing requests for hearings on Capitol Hill in both the Senate Ag and Judiciary committees to talk about price transparency and possible antitrust violations in the packing sector. Well, there's a lot of interesting developments coming up, and we're definitely going to be following them through the rest of the summer and possibly beyond that. Thanks so much for joining us today, and thank you to Ag Risk Advisors for sponsoring. Like I said, if you have questions about PRF or LRP, definitely reach out to them. Remember, if you don't have a policy, it's not a problem. They're happy to help you take a look at LRP or PRF, and you can see how those programs work for your operation. Thanks for joining us. I hope the month of June treats you well. I'm Colter Brown from the Northern Ag Network.